Hi, what we want to talk about in this recording is managing your account for profit. There's many ways to do it, but here are a few ideas that we're going to be going through that may be of help to you. We're going to discuss what can be possible in trading the Forex market. And we're going to take a quick look at two different strategies, the midterm and a short-term strategy. Then we will show you how to determine the maximum number of trades that you should take at any one time to maximize your profits. These are just suggestions, but they're get you thinking about how to trade for profitability. So we're going to go to the charts to demonstrate this. So what we're going to do is first of all look at the two different strategies. I'm not going to go in a lot of detail. You can come to the Pip Club and see us use those in more detail or watch the videos in the scanner. But one of the strategies involves the 30-minute time frame, and it's involved when the filter crosses the zero line. I'll show you a couple of quick examples when it crosses the zero line. That's the heads up. That's all you're looking for right there. Then we go to the 5-minute, fresh cross on the 30-minute. Then we go to the 5-minute. And what we're looking for here is it has to be an early bird filter or a 4-bar. Well, that's not early bird filter, so we had to wait for this 4-bar, which would be the same thing. And then we go to the 1-minute and see if that matches up. It has to be a 4-bar, and it needs to be a fresh going across right there. So that would be where you'd get a scan, and it was good for a 20 pip move. I'll do one more example on this one, and we'll go to there's an Aussie pair. Let's take a different pair. So right here on the 30-minute, what are we looking for? We're looking for this fresh cross going up. And since it was going up, that's the direction we're looking to trade. And then we look at the smaller time frame on the 5. It has to be at least an early bird filter, which it is not. The early bird filter wasn't there, or a 4-bar. Either one of those would match up. So that says now it's in compliance. Let's look back to 30-minute. Is it still in the right spot? Yes. Now we'll go to the 1-minute. Now the 1-minute has to be a 4-bar. And so we see a 4-bar right there. That's where the scan would go off, and there's your scan. So that's the strategy. It's not for a lot of pips, 5 to 10, 15. Occasionally you'll get 20 pips out of that. The next strategy we're going to look at is the 1 hour, 15, and 5. This is a midterm strategy. What we're looking for is the 4-bar, 4-bar, 4-bar on the 1, 15, and 5. So we can do a couple of these quickly. Right there. There's a 4-bar on the 1 hour. And we'll look at several to see how it filters out. And here's a 4-bar on the 15-minute, and here's a 4-bar on the 5-minute. This is where you get your scan, and there was a 10 pip move, but you should manage that and you probably get easily 20 pips out of that. So what we're looking for is the 4-bars. Now let's look at some other 4-bars. There's a 4-bar right there on the 1 hour going long. Does that mean that that's going to be a good trade? We don't know. Let's see what these smaller time frames tell us. That's not a 4-bar, but there's a 4-bar right there. And on this 5-minute, was that a 4-bar? Yes. So you would receive a scan there. Let's see what that would have looked like overall. It was only 11 pips. So, yes, that's a good solid signal. Not for a lot of pips, but be careful in that. Look for fresh. Sometimes you may say, I only want to take 4-bar trades when the trend is above or below the zero line. And this is below the zero line, so that would be a point to say, well, I only want to take sell trades. Give some heads up. One more, just so you'll be aware of. This was close, so either of those 2 bars, I'm going to put 2 lines. You say, okay, I'm only going to take a 4-bar when it's below that zero line. Then we go to the 15-minute. Now what does it have to be? It has to be a 4-bar also. It was not a 4-bar right there. It became a 4-bar right there. So those two time frames said it was ready to go. Now we go to the 5-minute. 5-minute was a 4-bar, so that's where you would receive a scan. It went a little bit in your direction, came back against you a little bit. Then here was a trade over here for 20 pips. So those are the two strategies. They're high probability strategies. Now, that's how you can become consistent, by just using one or the other or both of those strategies. Now, I'm going to do something now that you do the same thing. Pick a demo account. You're not worrying about making pips. You're not even looking at which direction the market's going. That's what you're looking at. Is we're looking down here at the bottom, and we're looking to manage what takes place down here. The example is going to be, for every $100 you have in your account, this is just an idea, a suggestion, you use 0.01 or 10 cents in your account. So this would mean you would trade with 2.5 mini lots. So I'm going to click on this so I can move the trades quickly when I'm putting them on. And I'm going to change the amount right here to, I think it's 0.25. So I'm going to place I'll buy or I'll sell. It doesn't make a difference. So what I'm going to do is I'm just going to put buy trades on, and we're going to look down here. I'm going to take this buy trade. Okay, now this is the percentage we're wanting to look at. That's 4.99. We don't know how low we can go, how many trades we can put on, but this will tell you how many you can trade at one time. You have to decide whether you want this figure right here to be above 1,000, more than 200, more than 300. You decide which figure you want. It will turn colors when it reaches 150 and say caution. Okay, we're going to put another buy trade on. Okay, we're still above the 150. Put another buy trade. Okay, there it got close. It's 165, but maximum on this account that you should trade, if they're high probability trades, would be 3 trades. That's how you figure it. Now, let's say that the trade goes, or your account grows to 2,700, or it decreases to 2,300. 2,300, then you'd want to change your lot size to 0.23. If it goes to 2,700, you increase the lot size to 0.27. So for every $100 in your account, you increase this section right here by 10 cents, or 1/10 of a mini lot. And that's how you could maximize the amount of profit in your account. Many people would only be using maybe 2 trades at a time. This situation, maximum 3 trades. Now, that's how you can do it. Let's see if it'll let us put on another trade. It may not let us put on another trade. It did let us put on another trade. It went down to 124. Let's see if it'll let us put on another one. It won't. It gave me a noise and would not let me put on another trade right there. So that's as low as it would go. If I lower this lot size, I could put on more trades. But really, you're stretching it at 4 trades. 3 trades would be good, because when this hits 100%, it generally starts closing the most negative trade that you have over here. If they all go positive, then you won't have a problem. Okay, that's a little scenario as to get a strategies that are very consistent and get a management level so you know how to do the size of your lot size. This is a manual way of doing it. You decide whether that works for you. If that's a little aggressive, then maybe you start at 0.20 on a $2,500 account. And let's just do that. Let's close these. Okay, we're close to a $2,500 account, so I'm going to change this to a 0. Now I'm going to put buy trades on again. See, this was at 4, now it's at 6. Okay, I put 4 trades on. It's 155. Let's see, will it take another one? Yes, it took a fifth trade. 2, 4. It took a 5th trade. Let's see if it'll take a 6th trade. Yes, it even took a 6th trade. So by lowering that lot size there, now if you get a $300 account, if it goes down, then you change this and lower it by 3. So it'd be 1.7. If it goes to 27, then you do 0.22, increasing it to 20 cents per every 10 cents for every $100 in the account. Just a couple of ideas and suggestions that you can do to maximize and make a lot of percentage on your account. So now we're going to talk about being consistent by following at least one of those strategies that we talked about. If you're a short-term trader, trade the smaller time frames. Or if you're a longer-term trader, you can trade the 1 hour or 4 hour strategies to use the same thing, but you're doing the same thing on every trade. So here's an example of a trade. This is a 1 hour chart. So remember we talked about the 4 bar, 4 bar, 4 bar? Well, there's a trade. And that was about 30 or 40 pips on that trade. Now here's a 1 minute chart. This is we call it the Area 51. It's the 5 minute and the 1 minute trade. And this was only like 5 or 6 pips. It was a quick 5 or 6 pips. The market moved really quickly, and it was just closed because it had gone far enough, fast enough. So if you consistently did either one of these, the larger time frame, you might consistently get 20 to 30 pips at a time. This one, the 1 minute, you could get 20 pips if you catch one just right, but chances are you're going to get some 5 and 10 pip moves out of this. But if you do that a few times a day, then you're doing just fine and you're consistent in your trading. Okay, now once you're consistent making profits and positive pips each day, then follow these suggestions to how to increase your lot size. You can do what I just suggested, or you can come up with your own. And this way, if you maximize your lot size once you're consistent, that's when you'll start making money. But if you're just randomly changing the lot size, or you're randomly having it too low because you're frightened, you need to increase your emotional strength with your trading strength to maximize the money. So let's start out with a goal of 10 pips a day. Now, many people have done this, and they say, okay, when I reach 10 pips a day, then I'll raise it. But for example, 10 pips a day is 50 pips a week on a $2,500 account at the 0.25 lots that we used in the example. That's 10 cents for every $100 you have in your account, or 0.01 lots per 100. Okay, that equates to $125 per week, or $500 a month, or that's a 20% return on your $2,500 account. That is very respectable. And if you're consistent, that may not seem like a lot, but look at the percentages. Don't say, well, only 500, I can't even live on that. Well, that's not the point. The point is that you're learning how to trade. Now, at the end of the month, your account is $3,000, and your lot size would be 0.3. So now you're starting to build up some momentum. Okay, now let's take 15 pips a day. You become consistent, you got a little bit better in your skills, the same number lot size, even though you know you're supposed to increase it. That gives you about a 30% return by just increasing the number of pips. You haven't changed the lot size. But if you did the increase the pips and the lot size, now that 30% is going to be 35, 40%. Now this is what's possible once you become consistent. Now, what if you have a losing trade? That's okay. You're looking for the consistency. So you netted each day the 15 pips or the 10 pips. One day you may be more than that, but what if you only had, your goal was 10 pips and you had a loss of 10 pips? It's okay, start over the next day and shoot for 10 pips again. It doesn't take long for your back up to where you need to be, and you'll get consistent and be able to grow your account. Now let's focus on the 10 pips a day. You may want to start out at even 5 pips a day, but we suggest that when you can make 10 pips a day for at least 2 weeks. This is just our suggestion that you may want to consider start trading live and trade with the smallest lot size your broker offers until you're confident you can make the 10 pips a day. And then this is when you're trading real money. At that point, once you're consistent and feel comfortable there, start increasing it up to a level that you feel comfortable with. Increase the lot size by 0.01 lots as your account grows. Take your time with this increase. If you don't want to grow quite that fast, you pick out a pace that works for you, but increase that lot size as your account grows. Decrease it as your account goes down if you're losing. If you're losing, you should be going back to demo account and don't lose all your capital. Increase the lot size slowly and let your emotions keep up with your new trading skills. Once you become consistent, then you can start increasing the lot size and you're more quickly and get up to a larger amount, making more money. This would increase your lot size by 1 mini lot for every $1,000 increase in your account. Well, then you start making the 50 pips a week. Well, there's 200 additional pips if you've increased your account. So you're going to be doing, you do the exponential increase, it's even going to be more than that. So you can do your calculations. You'll see that it will grow really quickly once you start being consistent. So can you see that you can do it? So we want you to start where you're at. If you're in a live account, make sure you're doing the same consistent trades, methods, and style each trade. If you're in a demo account, well, start from where you're at and become consistent. Don't do a different thing on every trade. Don't need to adjust things every trade, but find one of these strategies that may work for you and then get a good trading system. That would be the nth degree. If you don't have the nth degree, get the nth degree trading course, and that'll give you the material to help you be consistent. Now, to have tools to bring some of these trades to your attention, you may want to consider getting the Norwood Strategy Scanner. That brings these trades to your attention that we talked about. And that's another way that you can become consistent. And so discipline yourself to follow some rules. Learn to repeat that action daily and don't change things, just repeat them. And the fastest way to get to the 10 pips per day level is to trade with someone that already knows how to make 30 to 50 pips a day. And pretty soon you'll start making more pips per day because you're seeing how others make more pips per day. And so we want to give you an invitation to attend the Pip Club. Watch several traders use one or both of these strategies, and we'll talk about the 10 pips or more per day depending on the way the market moves. So this is the link. So everyone can attend this. If you log into forexstrategysecrets.com and go to the bottom of the page and click on this icon, it'll give you the schedule to be able to attend the Pip Clubs 3 days a week on a regular basis. So if you can attend that, that's a great way to be able to trade with people who are bringing to your attention the 10 pips a day. This is what you will get with the nth degree course. You get 2 acceleration coaching programs. You get a Fibonacci course with it. All the videos on strong and weak zone trading, 8 additional trading strategies in addition to those found in nth degree. The trade grading system and the trading lab series, which is about 21 additional videos answering questions. Normally, if you bought this individually, it's about $3,900. But because of this webinar, we're offering it for $697. I'll give you the link here. Now you can copy this link down and type it into a browser and you'll be able to buy the nth degree course material. Or now let's talk about the strategy scanner. Let it do the work for you. Now this means that you'll do less work, you'll have high probability trades, and you'll do it in less time in front of the computer. So here's the link if you just want the scanner only. If you want them both, then you copy both these links down and order both of them. Here's where you would contact us, Jed at forextradersecrets.com, or you can give a call at the phone number listed there. And you can find this information right on the website as well.